Good afternoon, everyone. Futures Barizio here. Just 2 minutes after noon on Wednesday, July the 15th. Hope everybody's doing great. And let's jumping in with I guess, kind of a midday update. We'll take a quick look at futures and then take a quick look over at Forex and what's going on there with, again, looking at our range bar charts. And I'll talk really briefly here also about prop firm rules, and one that I'm experiencing right now, which is probably the one I hate the most. And I know not every firm has them. That's the consistency rule. And we'll talk about that because that's actually affecting me right now on this this other futures prop firm challenge that I'm doing with Tradeify. So let's just jump right in. Make sure you smash that like button. Any questions, comments, leave them down below, and subscribe to the channel. Really appreciate it. And I hope this is helpful. We'll just jump right in. Okay, so we'll start here on futures. And I closed a trade. I took a long on, this is wheat. I took this long yesterday. And let me just turn on my execution marks here just so we can see. Okay, so this is the one I took this trade. You can see yesterday at 11:20 a.m. You can see down at the bottom there, or actually just before 10 o'clock yesterday morning. So around just right after the market opened. And this is where I closed it this morning when the market opened. I had a pending market order to close it right here. And you're like, well, why? You're probably saying, well, why did you close it? I mean, God, look, it's kept going up. Well, the reason why is because I'm in a challenge phase of another futures prop firm I'm trying to pass. And unfortunately, I already had a consistency rule score that was already going to make me have to trade a little bit more beyond my initial profit target anyways. And this thing, I took this trade yesterday. I left it overnight. And I woke up this morning, it was right here before the market opened. So again, I put the pending order in, and as soon as the market opened, I got filled. And yes, it has gone up further. And I had no surprise that it was going to go up further. But I wasn't going to hang on to it, because if I did, my consistency score would be even more out of whack right now than it is. And so I closed it. And so basically what a consistency rule is, if you're not a prop firm trader, then you may not know this. If you are, then I would say 99% of you probably know what a prop firm consistency score is. And essentially what it is they make it so that they set a percentage, and on this particular firm, it's 40%. And most of them run anywhere between 30 and 50%. Some of them are 20, but somewhere in there. This one's 40, which is a little bit on the high side. And basically what it says is that you cannot have, of your total profits, you can't have more than 40% of that occur during one single trading day. Okay. And the reason why they put that in place, they'll tell you, is because they want you to prove consistency, small gains instead of just, hitting a home run on one or two trades. And, to them, they're like, well, that doesn't prove that you can trade consistently. It just proves that you got lucky. At least that's what they say. Now, and of course, they want consistent traders. But look, let's face it. What the hell do they care? Honestly, because the thing is in this particular prop firm, they don't have a consistency score in the funded phase. Okay. They only have it in the challenge phase. So if they were so worried about having a blowout single day, right, then they would have a consistency score on the funded phase too. Now, some do. Some have it on one or the other. Some have it on both. This particular one only has it on the challenge phase, not on the funded phase, at least not for the challenge type I bought. And that's a key for me, because when I look at these prop firm challenges, of course, I would prefer one that has no consistency rule at all, but that's really hard to find, especially kind of a quote legit prop firm, as legit as they can be. And so if I had to pick, which one I would take, I would rather have it on the challenge phase. Yes, it draws out your time to pass the challenge, and obviously it doesn't really put you at any more risk of failing it, because it doesn't really affect your drawdown or anything. but it will drag out the time it takes you to pass the challenge if you have one or two trading days where you kind of blow it out of the water. Okay. And so this day, this profit right here was about over $1,700. Okay. Now this is a $50,000 trading challenge, so I have a $3,000 profit target initial when you started it because it's 8%. So 8% of 50,000 is 3,000. Well, this obviously was 1762. That's more than half right there. Okay. So even though I'm well past the $3,000 mark, I'm up around 3,700. I still have not passed the challenge because now I've got this consistency rule BS, which is annoying, but I knew it going in. But again, if I had let this trade run today and this thing was still open, I would be even more out of whack, because now what they're telling me is I've got to make, as of right now, I've got to make $4,400, which is another like $760 over where I am now in order to pass this challenge. I got to get up to about $4,400. Okay. When initially it was 3,000, right? The initial profit target was 3,000. Now it's $1,400 more than that because I've had a couple of high days, and this one today really hurt me. So, so that's what a consistency rule is. But again, back to my original point is, if they were really worried about consistency, they would all have it in the challenge, in the funded phase, right? Because if they don't have it in the funded phase, then you can have a blowout day, make a shit ton of money, request a big payout, unless they have payout restrictions, and they have to pay out more money. In a challenge phase, who the hell cares, right? Because to them, it's like, okay, you passed the challenge. If you get into a funded phase and you're just like the wild west and you're just putting on these big high risk trades, you're going to end up breaching the account anyways, and they're never going to have to pay you out. So, so again, their rationale behind it is they want you to be able to show consistency, and not that you just, quote, got lucky on a couple of trading days. But stuff like this is like really hard to I mean, I only had one contract. I can't get rid of this sell stop because it closed. I don't know how to get rid of this. I click on it and it doesn't go away. It says fail to cancel. So I don't know. I think eventually it'll wash itself out. But I only had one contract. You can see right here, one. Right? So it's not like I was running a bunch of contracts here and just like got greedy. I took one contract. I can't go any smaller than that. And the thing just happened to run up overnight, which I knew it would go up. And unfortunately, I didn't like set a profit target before I went to bed last night. What I should have done is, because I think last night, let's see, today is Wednesday. Let me see here. I'm just trying to go back. These are range charts, or it's a little, okay. So last night when the market reopened at, 8 o'clock, or this was actually, this was at 10 o'clock. So there's a couple hours right here. This range candle right here, it was already back to this high. I entered down here. So theoretically, I should have probably just closed the trade right here last night, up at these highs at 10 o'clock last night, but I didn't. And it ran up. So maybe my fault too. I mean, if I had done that, I probably still wouldn't be at my profit target, but my consistency score would be better. So there you go. So anyways, that's kind of the pain in the ass with consistency scores. But like I said, if I have to have one, I'd rather have it in the challenge phase, because yes, it's going to make me have to continue to trade here a little bit more before I can pass this. I need to make another, like I said, as of right now, $766. I did the math. And that's the way it goes. So, but anyways, it was a great trade either way. Putting all that aside, you can see here trending up. This, again, we're using our 20-period range bars. I've been talking about this. I'm not going to rehash, but for futures, since I try to just day trade these, I may hold it into the next session like I did today, but I generally, I don't, hold trades more than like one day. So, but here, again, it's a 20 range setting, and you can see this is really great with the moving averages just to really find excellent entries. And so what we saw here, prior to me entering this trade yesterday was we came up, ran up this big high. We had very bullish action, kind of went into this consolidation. Okay. And then we had this liquidity sweep down here. Price broke out of this range, right? Kind of try to trick people into going short right here, like broke structure, tries to go lower. But you can see what happens here. I'm going to zoom in a little bit. It did break below with this candle, but then it immediately just started going sideways. Very next candle came back and it erased that move down. And then we had another one to try to come up into the range. We had a red candle, which failed to come lower again. And so continued the sideways. Then the fourth one was a bullish candle again, complete sideways price action. And then we had another red candle, again, did not change the range at all. And then finally we had this green one that broke the range, broke this little range, but it rejected, right? It closed higher back inside the range. This was your liquidity sweep right here. This little wick right here swept all your liquidity and swept the stop losses below this range. And then it went higher. So I saw this. I waited for one more candle because I wanted to see this range broken, right? I wanted to see this little, if I move this little, whoops. Guess I could have just grabbed another one, right? Well, whatever. Let me just grab another one. I wanted to just see this little range right here broken. Okay, it broke on this candle. I missed that one, so I took it on the next one, which was a definite confirmation, and I took the trade. You can see the green arrow was on, the blue arrow was on this candle, and that's where I took my long. And so, range bars are definitely subject to liquidity sweeps too. And, it's just, but the thing is the market was bullish. And the nice thing about the range bars is because it broke through this lower end of this range, but immediately started going sideways in a very well-defined range. So clearly the sellers were not able to push this thing lower. And then this was the magic candle right here with this liquidity sweep, with this big wick, closed green. And really I could have entered right here. This was yesterday morning at 6 a.m. Well, I wouldn't enter there anyways. I wasn't on the charts that early. And then this one was at 9:30. So this was at the open. Okay, this candle was at the open. I don't usually like taking trades right at the open because there can be a lot of volatility. So I waited for the next one, and that's why I got in here. And this was literally 20 minutes later. So the market opened higher and then kept going higher. 20 minutes later, it jumped another couple of points, and that's where I entered. Okay. So it's a very, very, very clean setup as far as I'm concerned. It shows the initial range. It shows, yes, a break below the range right here, but you can see all these range bars moving sideways. It's telling you, it's yelling at you that there is no selling momentum here. Okay. It's, red, green, red, green, red, green. And then this last green one was the liquidity sweep. That means it's just consolidating. They're kind of the big guys are reloading their positions right here. And then they sweep some liquidity. People try to go, long maybe in here and they get stopped out, or they trap short traders. Traders go short somewhere in here, maybe even on this wick, they go short and then they get trapped. They get stopped out, and that just accelerates the long because, you have to buy in order to reverse a short position. So that just fuels the up move even more. Okay, so this classic liquidity grab right here, but you can see how well these range bars kind of pick that out. Okay, as far as the consistency rule, it is what it is, right? There's nothing I can do about it. I'm going to have to just keep trading and try to, hit that profit target. But I need another $766, which is not a huge deal. I mean, I don't necessarily need to go for that all at once. I'll probably try to do that over like 2 trades. Now, the thing is, I could have a loss in between there. My next trade could be a loss. And now that 766 becomes 1,000, right? Because now I got to make up for the loss. So it's not like I'm going to just make 766 on my next 2 trades or whatever and move on. Murphy's Law and just how trading works. It's 50-50. I may very well have a loss on before I hit that number, and that's just going to increase my how much I have to make more, because your losses unfortunately raise your consistency number because it all gets figured into the equation. So it's a little bit complicated, but if you're a prop firm trader, you understand that. And so we'll see how it goes. But the bottom line is, even though I had a great day and I'm well past my initial target, I'm not. I didn't pass this yet because I have to hit my consistency score. Okay, so that's it for futures. I didn't take any yellow future. I'm not taking any yellow trades today. There actually was a trade in corn, I think. Oh yeah, there was. Let me see. You can see this corn trade. I took it and then I immediately closed it. And this would have been a fantastic trade if I was either funded or still was not at risk of, or I was still working towards. I wasn't at risk of blowing out my consistency score more. I took this trade, and then when I realized how that I, you know, increase my consistency score on that other trade, I immediately closed it. But you can see this blue. I don't know why it doesn't show the one, but the trade's closed. It was at zero. I literally opened it and closed it like 2 minutes later, which is probably why the red arrow is probably underneath this because I took it and closed it. But you can see this was corn. This is another beautiful bounce right off the moving average. You can see just like this last one, which was on last Friday, went up. We pulled back here. Moving averages are trending up. Had a nice little, there's really no consolidation range here with the range bars. This is just simple, pull back into a moving average and break. But the range bars make it nice and clean to see when to get in. Obviously, right on this candle right here, this is definitely a nice fat pullback right into the moving averages. And it's very much like this one, right? Came right back to the 21 SMA. That's what it did here. And, corn, the pullbacks in corn are not always as volatile as they are in wheat, where you can get them to pull back way back into the 34 or maybe even below that. These corn pullbacks tend to be a little bit more shallow. So I would have been comfortable taking that. And had I not had this thing with the consistency rule, I would have stayed in this trade and it would have been in a nice profit so far. But I get past this challenge phase into the funded phase. Those are the type of trades I'm looking for. Okay. But that was the only other one. I didn't even really look at the other ones because I wasn't going to take them no matter how good they looked, because I don't want to continue to ruin my consistency score. Okay. And up that number even more. And the longer I sit on those profitable trades, unfortunately, that 1762 daily max that I made is going to go higher and higher. And that's just going to add to that number I have to make to pass the challenge. So hopefully that makes sense. So that was it for futures. And we run over to Forex now. Let me change this back to 500. And we'll flip over to Forex. So in Forex, these are the trades I have open right now. I have short Euro Kiwi, short dollar Canadian, short Euro Canadian. I did close a couple of 2 trades overnight that hit my TPs. I had set these before I went to bed last night. The nice one here was pound AUD, about $874 and 133 on Aussie yen. That was a short trade, short-term trade. I haven't looked at pound AUD today to see how much further it went, if it did. My TP was at 191.63. So let's look and see where pound AUD is right now. What did I say? Okay. And look at what's happened. My TP was right here, 191.63, which is exactly where the price went. Guys, listen, like, I have no idea. But look at the bottom. Look at that dashed line in the bottom of these 2 candles right here. Right? This was hit at 6 o'clock this morning. This low was put in 6:13 this morning. Okay, during the London session. But if I put my crosshair and put that horizontal dashed line right at the bottom of those 2 candles, it's dead on right where my TP was. Okay. All right. Now because I was looking at basically a previous kind of area of consolidation, which was back here. We had this little liquidity grab. We had this little area. So I just put it slightly above there, and that's exactly where it went. If I hadn't gotten filled on that, this thing would have rocketed up and I would have been, probably at a loss by now. And so this is actually a good long because we were going up, we consolidated, we had a liquidity sweep. Basically, this turns out to be a liquidity sweep because look how bullish these candles are. I should have taken this long, to be honest. This is the first time I'm looking at it all morning. I've been a little bit busy today. I looked at a couple of other trades earlier and I just skipped this one because I had already closed it. And but boy, I'm looking at this now. This is a classic liquidity sweep right here, where the price was going up, came into this consolidation range. Very, very easy to see with the range bars, right? Yellow line marking out the range. Broke through here. We had two candles going lower, which was part of the short position I took. And then all of a sudden right here, boom, this engulfing candle. And there's the continuation of your uptrend that started right here. Okay. So anyways, I'm not chasing the market. I'm not chasing it on 3 green candles. We'll see what happens. If this is going to go higher, I'll have plenty of opportunity to go higher, to get back into it. However, we do see a long-term swing high back up here, close to where these highs are. So I would be a little hesitant going long here. Doesn't mean this won't blow right through here, but we are approaching a major swing high just beyond this range up here. Okay. So I would be a little cautious of that on any pullback, but from down here, it's perfectly valid, even if you just traded back to this range high right here. But I didn't do that, so be it. And then Aussie yen was the other one I was long. And this one is still going. I had my TP was hit at the top of this consolidation range. That's where that got hit. It has gone beyond that now, but it's still not beyond the wicks of these candles. I like to put my TPs at the bodies of the candles, usually more than the wicks, because the wicks generally are telling you there's low volume there, and sometimes you don't get filled, especially in Forex, and especially if it happens at a time of low volume in the market. So, we do have these wicks at the top of this range. So we'll see what happens when it gets here. Probably we'll see some sort of reaction, but I could have held this one a little bit more. Like I said, my take profit was hit early this morning. I think right around the New York Open, probably about right where my pointer is, because that's where I had put my TP last night, around the candle bodies of this range. It has gone a little further, but I'm perfectly fine with that. So, all right. So the yellow one I'm in, like I said, right now, Euro Canadian short. Now, this one could turn out to be another liquidity sweep. I entered here because you can see what happened. We were, I guess we were going up. It was a little choppy. We formed this big range right here. We broke below. Okay. And then we had this candle right here, which to me could have been a liquidity sweep. This was 3 o'clock yesterday morning, so I was not on the charts then. When I came back to the charts yesterday, this was 8:30 yesterday morning, so this is after New York Open yesterday. I saw that even though this had happened at 3 a.m. during London, when London session opened, the price went up, and you can see the range bar went up and just tagged the bottom of this range again, rejected, and started going down again. Whereas, unlike what we see with GBP Aussie, where it came down here and just didn't look back, right? Green, 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 big green bars rocketing right through the range. This, we had one green bar, which occurred again when I was not on the chart, which is probably good because I probably would have, honestly, I would have considered taking this long. But fortunately, it happened at 3 a.m. I wasn't on the charts then. By the time I came to my charts, we were right here at 8 o'clock yesterday morning, and I saw the rejection off this level, and that's when I took the short. So I'm keeping a very close eye on it, but the fact that we didn't get any continuation higher off of this makes me a little bit more confident that this will have at least a little downside potential right here. And you can see there was a support area right here. That's where this candle rejected off of, was this previous support area. So if it gets through here, my next target, I'd probably look at putting a TP on maybe like somewhere around this 159.65 area somewhere down here. Okay. Well, let's see what happens. I'm keeping an eye on that one, but that's why I took it. And then dollar Canadian, let's look at that. Okay. You can see I had an alert set up, one above and one below this little mini range, which you can see a little bit better if I make this like 250 on the range bars. Yeah, it's still a little tough to see. Let's make it 350. That's a little too much detail. So, right here, and then we broke lower. Okay, it's a lot more detail on this. So let's go back to the 500. Now, look, to be honest, I wouldn't be surprised if this eventually turns and goes up. I mean, we still had a very, very strong move out of here, okay? And this whole move down, although right now it's pretty bearish, it does look more corrective to me because of all these wicks. Yes, it's going down, but they're not like, solid giant red candles other than this one that it's currently painting. The rest of these are just like, wick, 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 wick. So it's going down. Buyers are trying to come in, but to me, there's just not a lot of volume probably in here. But I'm probably going to be very cautious about holding this one too long. I know I have the moving averages showing, which I don't really use for Forex, but if I turn those off, I mean, that looks pretty bearish right now, but, you have to kind of look at things in context. And so when I look at this, on the way up here, look at these pullbacks, right? Small little pullbacks, couple of candles, one red, one red, one red. Then we get up here. Now look at all this red. So this looks a lot more out of context for just a regular pullback. Yes, there are a lot of wicks because the buyers tried to keep coming in here and rejected. Okay. But again, the reason why I felt comfortable taking the short is because, all these pullbacks on the way up here, and like you look at this last downtrend, right? Just small little single or one or two candle pullbacks to go down. And then on the way up here, one or two candles at most pullbacks. Now we have this is much more bearish looking because there's so many of them. So that's why I took it. But, it does follow a big run up too. So you do have to respect that. So now if I was looking for a take profit level, which I don't think I set one on this yet, but if I was, this is right about here. And again, this is me personally. This is probably where I would look right there. Okay, because I wouldn't put it at this low because if this is going to go higher, price is probably not going to make it down here. The buyers will pick that up before. Now, look, if I'm wrong and it just keeps going down, then there'll be plenty of opportunity to enter on a pullback, right? If this goes through here and we just keep going lower, that's fine. If I get out right here and then all of a sudden it pulls back and then it just rejects and dumps again, no problem. I can always get back in. But for this short I'm in right now, this around this 1.4 area, which is a nice round number, is probably a good target. It's at the body open of this green candle. It's high enough in this range where I think there would be enough volume to fill me right here instead of trying to squeeze out a pullback all the way to here, which a lot of times it doesn't get there if this is actually a corrective move. And even if it's not, even if this is, a bear move, it's going to pull back at some point and have a deeper pullback. And a lot of times it won't get to those extreme levels. It'll hit the next area, next to that. So I hope that makes sense. So that's dollar CAD, Euro CAD, and then what did I say the other one was? Oh, that's it, right? Oh, Euro Kiwi. So let's look at Euro Kiwi. And Euro Kiwi is a continuation trade. This thing had been screaming to the downside. I wish I had caught it all the way. But there it is. And I got in. I was waiting for another pullback because we had this, going down here. So I got in last night on this candle before it closed because this was 11:30 last night. I was not awake then, but I got in. But it was when this candle was forming last night. I felt pretty confident this range was going to hold. I had my stop pretty tight, though, right above here, and it has gone down. Now, where's it going to go? I mean, again, I don't think I set a TP on here, but, it's pretty obvious to me. I'd probably put my TP. I'm thinking probably right about here. Now, somebody might say, well, why don't you put it right here? And that's possible. But again, this is getting very, very close to this swing low with this wick down here. The volume from here down in here, that's it may not get that far. I mean, unless the downtrend is going to continue, in which case, like I said, it's fine. If I leave a few pips on the table and avoid like a big reversal, I don't have to be greedy. So again, my TP would probably look somewhere around this 195.15 zone, right where this green candle pulled out, it rejected, and then pulled out of this little zone right here. That's where I'd probably put my TP, 195.15, which is about 70 pips from where it is right now. So, and the Euro Kiwi moves a lot, so 70 pips on this asset is nothing. You can do that, and they can do that in a matter of an hour or two if it wanted to. So, all right. So those are the 3 trades I have on right now. I did have a few other things on my watch list. I did get an alert earlier on pound Canadian. I did not take it. Well, let's take a look. And yeah, should have taken that one. So, but again, I was quite busy this morning when I got one alert and I never went back and looked at it. So that's a missed opportunity. But you can see I had an alert sitting just above and below this range. Why did I have these alerts? Well, again, I think by now you know, right? We broke through this range right here. We came back, rejected, and started going lower. But I still wanted to see price definitively close below this wick. And you can see we got this candle right here, okay, this red candle. But that wasn't enough for me. It was too close. And I think, time-wise, it would have been okay. This was 9 o'clock yesterday morning. But it was too close to this range. Like, I wanted to see it really blow this level out, and it didn't. And then, of course, the next candle came back right here with a big green candle. And so this never got really triggered to the downside because I think I put this alert on after price had already rejected. I said, okay, well, if it really wants to go lower, let me see it take out this range, these lows definitively, and then I'll go short. But it never did. And then it came up here, and I had this one set. This level right here is a little more random. Basically, what I wanted to see it do is just get back into the range with a strong bullish move. More conservatively, probably a break above these highs would have been a safer bet, which would have been this candle right here would have been your entry. But really, anywhere from, anywhere in here, these first 3-4 candles would have been your entry. So again, I'm not chasing it now, so it is what it is. All right. And plus, I already had 2 Canadian dollar trades on. I didn't want to take any more risk. So that was the other reason why I wasn't going to take it, because I already have 2 CAD trades on and I don't want that much exposure. Okay. So here's one that I have. I just looking at my watch list from yesterday. I did go through it this morning, but I'm not going to cover all those right now. This video is getting long as it is, but so here is the Aussie New Zealand, which I don't trade a lot, but this is kind of interesting, right? We had this move down, and then, I kind of saw this range set up, lower high right here. This would have been a selling opportunity way back here, which I didn't trade this. I wasn't really using range bars. This was back on June 19th, so I wasn't trading these range bars. So, but this, if I was back then, this would have been an entry right here, because we had this move down, kind of broke some old structure, came back, failed. We had this rejected wick right here, failed to put in a new high, didn't even get back to this high. This would have been an entry for me. Stop above this and just let it run. But now that that's occurred, we look where price is now. Okay, I have this alert. If this broke below these old lows, which it didn't get there, it might. I'm not going to delete this alert yet. But if this rolls over and breaks through here, I would definitely consider a short position with a stop back inside the range. If this is going to go up, again, this is kind of a random spot. I just didn't want to put it too high because then price is kind of moved too far. But we get back inside the range and we get like those green candles, like I was just showing you on the pound Canadian. Then that would potentially be a long for me. That turns out this would be a liquidity sweep and we can look to go long. Okay. But right now I'm not taking any action on that right now. GBP USD, I did not have an alert set. I should have. This was one I had on my watch list from yesterday. Has broke. You can see the range I had defined yesterday. It now has broken it on this candle as of this morning at 9 o'clock. Unfortunately, I did not. As you can see, I have no alert set here, so just missed that one. I know everybody's saying like, geez, you're leaving a lot of good trades on the table. I get so frustrated with the whole futures thing with the consistency rule. That's really what it is. So that's my problem. Dollar Swiss, I have this range set up. You can see we're just trading inside the range. Absolutely nothing for me to do here. If I want, I can put an alert above this one and maybe put one down here, crossing below that one. Okay, so there's a couple of alerts but as long as it's in this range, I'm not interested in doing anything with that, but I did have it on my watch. Yeah, Euro, New Zealand, we already looked at. Pound Canadian, we already looked at. And pound New Zealand was a lot like the Euro New Zealand. And that one is actually starting to go higher. You can see again, it came down here. I had this alert for a short. If it broke there, it never got there. And now it looks like maybe this is turning higher. So, but I'm not going to, theoretically, there probably was an entry long. There's a small little range right here. Okay, it's a little hard to see on the 500 range, but if you go to a shorter one like 350, probably easier. But this technically is a good range right here, right? And I could have had an alert above here, which is this current candle. This technically could still be a long right now, so I might actually think about this one because it's this current candle right now. This started at 10:40 a.m., so it's only been 2 hours since this hit. And so even if we get a pullback now towards the range, that's fine. I'd probably put my stop loss below this, down here towards the bottom of this range, maybe below this wick. So even if it comes back and retests this a little bit, that's fine. I'd be willing to have a little drawdown. So this is actually one right now I may think about taking. So just letting you guys know. I'll keep you posted. If I ended up taking it, we'll look at it tomorrow, I guess, if I'm in it. So, all right. So yeah, I think that's about it. Just try a quick see if I have any other lines drawn here in terms of alert lines. Pound USD. When did this happen? This was this morning. I don't know. There's a lot of resistance back here. I don't know. So let's see. Anything else? I think we already looked through everything else. That's just ugly. Aussie Canadian. It's like the Euro CAD. Aussie Yen, we already talked about. I closed that one already. CAD Yen has been pretty yucky too. Or no, was it Euro Yen? Euro Yen's been really ugly too. Yeah, look at that. Ugh. So anyway, so that's it. So the only viable one right now is potentially GBP New Zealand. So I may think about that. GBP USD looks good, but I do worry about all of this resistance up here. I do think there will be a reaction. I'd rather wait for a pullback and maybe another consolidation to form up here. And then if it's going to go higher, then I could think about going long at that point. But considering how close it is to all these wicks, there's definitely going to be at least profit taking going on as it gets into this range here. So that's not favorable at the moment. All right, guys, I'm going to leave it there. I hope that was helpful. A long video, I'm sorry, but we covered a lot in terms of prop firm consistency rules and what's going on with that account. And then we looked at some Forex analysis too. So smash the like button, subscribe to the channel. Any questions, comments, leave them down below. Have a great rest of the day, and I'll talk to you tomorrow.